Welcome to this edition of Pulling Money Trading. I am Damien. Okay, so before we get into it, all right, we're gonna check out the disclaimer. All right, so content shared on this channel is not financial advice. Please read the disclaimer. Okay, all right. So let's get into it. The only technical analysis video you will ever need. Full course, beginner to advanced. Okay, but before we get into it, let's go through some trading rules. Number one, no strategy is 100% successful, meaning every trader on the planet have losing trades. Okay, number two, only risk 2% of your account on one trade. Use 1 to 3 Use 1 to 2 or 1 to 3 risk to reward ratio. Trade your system over and over, win or lose. Okay? Once you master these trading tips, you will master risk to reward and trading psychology. Okay? So at the end of this session, you will be able to identify market movement, identify potential buy and sell areas, identify potential entries, stops, and profit areas. Okay. All right. So let's zoom our chart out and get started. So we're on 2023 February. Okay. So let's zoom the chart up and we can start do our technical analysis. Okay, so in February of 2023, right, this is all the market data that we have, right? So let's work with the market data that we have. So the market started moving up. Okay, buyers push the market from this point right here. Let's use our tool right here at this price point. Buyers push the market from this point, right? Push the market from this point to the highest point, which is right here. Okay, draw a line, color code it red. So anything in red represents sellers, anything in green represents buyers. Okay, right, sellers and buyers. So trading financial markets is a representation of buying and selling of currency, right? So what you want to know when to become a buyer, when to become a seller. That's the only objective in the financial market. Okay, knowing when to become a buyer, when to become a seller. Okay, all right. So at this price point right here, 16,602, sellers push down the market to this price point right here, and then buyers push the market up again. All right, let me put in some text. Okay, buyers. Okay, so buyers push the market from this point, right, all the way up to this point right here. Okay, put it in red. Right, so in the financial market, in technical analysis, green represent buy, as in the candles, red represents sell. Okay, so the buyers push the market from 16,600 to 16,994. Okay, sellers push the market again from 16,987 to this point right here. Okay, so as you can see, market movement is a relationship between sellers and buyers, nothing more, nothing less. Okay, so once you can identify where the sellers are greater than buyers and where the buyers are greater than sellers, then you have a good chance of becoming a profitable trader. Okay, nothing more, nothing less. Okay, so let's take this a step further. Okay, so at this price point right here, we identify that buyers are in control of the market from 16,490 all the way up to 16,795. Okay, all right, and we can, from the market data, right, we can objectively see on the chart that sellers are in control of the market from 16,794 all the way down to this era right here, which is 16,600. Okay, so next step in this process, right, you can safely say that at this price point, before the market reached this era, okay, let me put the chart further. So say that the market was there, right? And we identify that buyers push the market from this point all the way up to this point, right? And sellers push the market from this point all the way down to this point. Okay? Objectively speaking, this is a clue that sellers are in this era right here. Okay? And if you look at this candle right here, right? This candle is showing a sell pressure in this area. Okay? All right. Now, when you move the chart forward, right, and see the market data, this is not enough information to take action, right? Because even though the chart showed that sellers pushed the market from this price point all the way down to this price point, sellers wasn't able to push the market all the way down to this area right here, right? Which simplify that buyers are in control of the market. Okay, so the fact that The sellers weren't able to push the market down to this era where buyers are in control. You don't want to take any action. You want to wait and get more market data, right, to see which direction the market is going to go next. Okay? So the fact that we have market data to show that buyers came in the market at this price point, which is higher than this previous price point where buyers are in control of the market, right? This is another clue. Okay? So for trend traders, they would regard this area as a lower high. Okay? No, I am not teaching trend. I'm just simply doing market analysis, but I'm gonna put in LH, which stand for lower high. Okay? All right. Now at this price point right here, where sellers push the market down to this price, this would be regarded as a higher high. Okay, I'm gonna put it in even though this is not a trend trading session, right? Okay, now at this price point right here, would regard it as a higher low. Okay, so HL would mean higher low. HL, higher low, meaning it is lower than this point but higher than the lowest low. Okay, all right. Now at this price point where buyers push the market to this price point, now with these four market price point, we have enough data where we can seek to take action. Okay, because it is clear, right, that the buyers are pushing the market higher and higher, right? Because the buyers are in control of the market from this price point, 16,491, all the way up to this price point, 16,788. And then the sellers push the market from 16,785 all the way down to 16,598. Okay? Now with this analysis, we are using the known, which is all the data on the price chart, to find the unknown, which is a mathematical principle. Okay? Let me put in a text again. Okay? So all we are doing, we are not thinking, we are not guessing, we are not spelling. We are using simple market data. Use what is given on the chart, which is the known, to find the unknown, which is a mathematical principle. Okay? Anything with numbers are mathematics, and mathematical principle can be applied. So we want to make trading as simple as possible using the market data, right, to find potential areas in the market where buyers are more than sellers, or sellers are more than buyers, where we can take action. Okay, let's move on. So we're gonna put in some more text. So the fact that buyers push the market from here, which is 16,598, to here, 16,993, right? We now have higher high. HH represent higher high. right? So we now have a higher high at this price point, and we have another higher low, okay? The reason why all the higher lows and higher highs are in green, it's because it's simplifying that the buyers are in control of the market, okay? All right. Now, for trend traders, they would put in trend line, okay? Remember, this is not a trend trading session. It's simply using market data to find where buyers are greater than sellers in the market and potential areas where we can take action. But I'm going to put in some trend line to identify where buyers are greater than sellers. So this is where trend traders would draw their trend line, right? To simplify where buyers are greater than sellers. However, this is not trend trading, but I'm gonna put in the trend line just for informational purposes, okay? Right. So the trend line are drawn in at the tip of the price point. Every move, every candle, every wick represent movement in price, okay? Our point in price, which is regarded as pip, okay? All right. Here is where it gets interesting, so bear with me. So the next important information that you're gonna want to pay attention to, this is something where a lot of trading educators are not gonna teach you, right? Because most of them, they are selling information like this, but I'm here to share my knowledge with you and share my journey with you. So, okay, let's move on. All right. So, at this price level where sellers were in greater than buyers at this price point from 16,790 to 16,601, and then buyers came in the market and pushed through this era where sellers were greater than buyers, intersecting this price point, which is at 16,790, right? Right here, where you have an intersection of buyers and sellers. This is a clue that at this era, right here, buyers are now in control of the market. Okay? Let me repeat. Sellers came in the market at this price point at 16,792 to this price point 16,598, and then buyers step into the market, pushing the market with this green candle right here, and I'm on the 4-hour time frame, pushing the market, cleaning out all the sellers at this price point and closing with a strong bull engulfing candle. This is key information where the price point of the buyers intersect the area where the sellers were in control of the market. This is key information that buyers are now in control of this entire area. Okay? Let me put it in a circle. So from here to here, right? this entire area where the buyers intersect the sellers, right? And I'm using mathematical terms and principles, right? Let me change the color to green now, right? I'm using mathematical terms and principle, right? As you can clearly see, from this price point to this price point, right? The buyers intersect the sellers, right? Now, information on the chart clearly show that it is a possibility that when the market come back to this area, buyers are now in control of this entire area, okay? All right. So as you can see, moving forward in time, sellers push the market from this price point all the way down to this price point, right? Where buyers are in control of this entire area, and then the buyers step back into the market at this price point right here, 16,671, creating a new higher low, pushing the market all the way up to this price point, taking out all the sellers at this price point, which is 16,991. Okay. All right. Now we're gonna look into entries and profit. Okay. So we already identify market movement where potential buyers are in the market and potential sellers, right? Now, for this example, we're gonna look at entry and stop and target, okay? All right. Now, because we already gathered the information that potentially buyers are greater than sellers from this price point right here, 16,599, all the way up to 16,990, right? Then we can now look to take action anywhere from this price point where buyers intersect sellers, cleaning out all the sellers. The price action clearly show that there can't be any sellers left in this price point right here at 16,791, because this big bull engulfing candle already cleaned them out all the way from this price point all the way up. So think of it as a war being fought between sellers and buyers. So if this was a stronghold of the sellers and the buyers now won the battle, taking over their turf all the way from here to here, then chances are the buyers have their soldiers and their army in this area waiting for the sellers to attack, to try and fend off their attack. Okay? Now, what you want to do is identify a area where chances are buyers are at their strongest in this entire area that we already identify that buyers are in control of the market. Okay? Now, the fact that sellers were able to push the market from this price point, 16,917, all the way down to 16,599, right? and buyers are able to push the market all the way up, creating this strong bull candle, right? The market is showing us that this strong bull pressure came from this era right here at the start of the big bull push, the big buy momentum. Let me zoom it up right here, right? So the sellers sell, buyers started coming to the market from this price point, 16,593, all the way up to this price point. Sellers tried to sell the market down and failed. Buyers stepped in, right? So there's a battle going on right here between sellers and buyers. So the market with the price action showed us that buyers and sellers are on equal term right here, because sellers are still trying to fight off the buyers. Buyers are fighting off the sellers, okay? So right at this price point where you have these two candles, right? No one is winning the battle right here, okay? Let me change the color. Right? So at this price point right there, there's a indecision, right? No one is winning the battle right here. Sellers sell the market, buyers try to push the market up, close red. Buyers try to push the market up, sellers try to fight them off. They're on the same level. So no one is winning, okay? Let me just stay with me. Let me put in a text. Okay, so market is moving sideways with these two candles. Now the key thing to note is right here where the buyers stepped into the market again from this wick right here, this candle wick, sending the market all the way up through this area, closing a big bull engulfing candle, right? Taking out all the sellers, right? So this one candle right here, as you can see, when I draw the line, let me put a square. So when I draw the line on this bull candle right here from this wick, right, as you can see, all the sellers were taken out with this one big bull candle. Okay? All right. I don't want to confuse you, so let me remove the square, but I just put it there to show you that all these sellers where the buyers intersect the sellers at this price point, buyers cleaned out all the sellers, okay? Now again, a lot of the trading channel, they are not going to show you this information because this is what they will sell you, okay? Now, from this price point to this price point, this is another key confirmation that buyers, the strong buy pressure in the market came from right here, right? And it went all the way up to here. So this is where we will want to put our entry, because the market data, the known that is in the market with the price action, confirm that the strength of the buyer started right here, continued all the way up to here. Market was moving sideways, no clear buyer, No clear winner in the war right here. So right here where this bull candle started, this is where we would want to put our entry. Okay. Let's put in a text. Okay. So this is where we would want to put our entry. Okay. Now, one more key thing to note, the fact that the sellers were able to push the market from 16,789 all the way down to 16,599, the lowest possible price is where we would want to put our stop. Okay, so we want to put our stop at least 10 to 20 pip below the lowest price point. Okay, so right here would be our stop. And I'm gonna put this in red, right? Stop. Right. So right at this point, 16,596, right? 20 pip or 20 to 50 pip below would be our stop, right? So the reason why this would be our stop is because the market, sellers were able to push the market to the lowest, which is this price point. So if in turn our analysis is wrong, you want to get out at the era where sellers were able to push the market, the lowest era where the seller was able to push the market. Okay. Now, the fact that the sellers were able to push the market from this price point, 16,989, right? Then our profit would be from entry to the last highest point where the buyers were able to push the market, which is 16,992, right? So our profit would be from, let me use a long tool, okay? Right, so this would be our profit ability, right? So from 16,989 all the way down to 16,669 is our profit ability. So this is where we're looking to make our money. Okay. So from here to here, right? Let me change the color. It's in yellow. Yellow. Right. So from entry to the last highest point would be our profit. Okay, let me put this in. Okay, right. Now, this would be the coordinates, okay, for this trade setup, okay? All right. So the entry point would be 16,668, right? And the profit target would be 16,990, right? Which is right here. The stop loss would be 16,559, right? Which is about somewhere down here, okay? All right. Now let's take this a step further. Now, as you can see, right, market break above this area, buyers intersect seller, cleaning out seller, right? And then price came back down into this area right here, where the buyers prove to be stronger than sellers right here, where market came right back to this area. Then went all the way up to take out sellers again, clean out all the sellers in this area. Okay. All right. Now, the next thing we're going to look at, right, to take this another level because we're pulling money from the market, right? What we would want to do is we would want to take profit at least halfway to our entire profit target. We don't want to hold for the entire profit target, right? We want to make our money as fast as possible. In the event we're wrong, right, and the market turn against us, then we will be out in profit. Okay, so to be on the safe side, what you can do is take profit at the area in which buyers intersect sellers, taking out the sellers. You can have your first take profit right here, right, to pull money. And if you are a more aggressive trader, you can have two take profit. So you take profit at the first higher high, which is right here, and then another take profit, right, at the full length of the profitability, which is the last highest area where the highest higher high where the buyers are able to push the market. Okay. All right. Now, to take this a bit further, the aim of trading, right, is to risk as little as possible, right? So because we're on the 4-hour time frame, what we can do, we can go down to a 1-hour time frame in order to find a lower entry where we can risk less, because one of this entry, the risk is let me see, 8. Oh, this is not too bad of a risk. because we're risking probably like about 16, close to like 200 pip. So this is okay, but if you want to risk less, because the aim is risk less to win more, right? What we can do is, okay, let me put on some text. So this would be take profit 1 TP1, right? TP2, okay, right? So what we can do for this area right here, we can go down on a smaller time frame and see if we can find a lower entry. Okay, so we're gonna go down to the 1 hour time frame, right? Zoom out our chart, find it here on the 1 hour time frame, see if we can find a lower entry where we can risk less. We're not seeing it, we're not getting that information on the 1 hour. Let me check the 2 hour time frame. No. So we're not getting all that data on the 1 hour time frame, but here on the 3 hour time frame, this is the here right here. Okay, so what you can do if you're a more conservative trader, right? What you can do, you can have a multiple entry. Okay, similar to having multiple TP, right? You can have more than one entry point. Okay, so on the 3 hour time frame, this is the here right here. We already identify that buyers are greater than sellers, right? So on the 3 hour time frame, as you can see, buyers were able to overpower the sellers in this area right here, right? You pushing using this bull candle right here to take out the sellers. So what you can do, instead of having your TP, your stop loss all the way to the back, right? You can risk less by putting your stop below this area right here where it shows that buyers are still in control of the market right here. Okay, so instead of having your stop loss all the way to the back, right, you can put your stop loss right here. All right, 20 pip below this point right here at 16,642. Okay, now in doing this, if the market goes against you, you would risk being stopped out of your trade, but you would risk less, right? So for this trade, you would only risk 640. You would only be risking 28 pips, right? So instead of risking instead of risking 5982, instead of risking approximately about 171 pip, right, for this trade, you would only risk maybe 28 pips. Okay, so that's the beauty of trying to find a entry on a smaller time frame. However, doing this, you would be at risk of being stopped out of your trades, but you would only be risking small amount of pips, right? So if, as you can see, one of this trade is risking 171 pips, one is risking 28 pip. And as you can see, the market came back into this area, right? And the market, chances are these orders might not have been filled because of how strong the buy pressure is in this area, right? So this trade for 28 pip, chances are you'd have won this trade with little to no risk, right? So you'd have won the trade with 28 pips instead of risking 171 pips, okay? And this would be a risk to reward of 28 pip in order to make close to 200 pips, right? Now, to go a step further, right, we're gonna look at some more examples, right? Going further in the chart, right, we're gonna look at some examples for 2024, okay? Right. So in 2024, March 2024, right, as you can see, let's start here at the highest point right here, right? Sellers were in control of the market right here at this price point, okay? Buyers push the market from this price point all the way up to this price point. Sellers push the market to this price point. Buyers push the market. So trading is always an equation of money moving from buyers to sellers, right? Once you can identify where the potential buyers and sellers are in the market, then you can make the decision to take action, okay? So buyers push the market from this price point right here. Buyers, right? Right. So buyers push the market from this price point all the way up to this price point right here, from 99355 all the way up to 109433. Okay, that is unknown. We are not thinking, we are not asking, we are using market data, using the unknown to find the known, which is a mathematical principle. Okay, right? So at this price point right here, again, buyers push the market from buyers push the market from 100,043 all the way up to the highest price point, which is this point right here at 107,232. Okay, sellers push the market from this price point right here from 107,355, which is lower than 109,330. Okay, so we have our first clue. Okay, stay with me. Okay, buyers push the market from this price point right here, right, from 101,178, right, all the way up to the exact same price point right here, 107,369. So we have another clue. Okay, right. So let me put in some text before we move on. Buyers Okay, right. So sellers push the market from 107,335 all the way down through all these price point right here from the buyers, cleaning out all the buyers right here. Okay. Now, this is an indication that sellers are in control of the market from this price point right here all the way down to this price point right here. Okay. Just bear with me. Let me add some text. So higher, low. Okay. So at this price point right here, buyers are creating higher low, but they are failing to create higher high, right? Which is a indication that sellers are overpowering buyers, because the buyers, they are creating higher lows, right? Three higher lows, right? Trend traders would draw their line here, right? But I'm not teaching trend, but I'm just putting in the line, okay? Buyers are creating higher lows, but they are failing to create higher high, which is a sign that sellers are stepping into the market. Okay, so once you see signs where buyers are failing to create highs, right, and sellers are creating lows, it is a sign that the market is about to go down. Okay, the next indication that we want to look for, right, is where sellers intersect buyers. Okay, let me put a circle, right? So from this price point right here, all the way down to this price point right here, we have sellers and buyers at war. Let me put it in red. Okay, as you can see, I'm using mathematical principle of using the known, to find the unknown, using the principle of intersection, right, to find our next possible turning point in the market where we can take action. Okay, so it is evident from the chart that sellers are in control of the market, right, from this price point right here, which is 109,468, all the way down to 97,8773. Okay, bear with me. What we want to look at is an area where buyers weren't able to push the market, right, to find our area where we're gonna take action. Okay, so at this price point right here, because the buyers push the market from this point right here, which is 104,171, all the way up to this area right here, 105,478, right? Let me put a line on it. Buyers were able to push the market all the way up to this price point right here, right? This right here. Let me put it in purple. Okay, the fact that buyers weren't able to push the market back to this price point right here after we determine, let me put in the intersection point. Okay, sellers intersect buyers right here. Okay, right? So this era right here is the first clue, right, to take action because we identify sellers was able to take out all the buyers, right, forming a strong bull bear candle. Okay, all right. What we want to look at is the area where buyers weren't able to come back after pushing the market, taking out all the buyers, where buyers weren't able to come back after sellers wipe them out. Okay, so at this price point right here, buyers were able to push the market from here 104 181 all the way up to this price point right here 105 441 before sellers wipe them out. Okay, so this era right here would be our era where we are looking to take action when the market come back to this era, because buyers weren't able to come back to this era right here where you have the sellers and the bear engulfing candle. Okay, so we're gonna put our short tool. Okay, so from this point all the way down to this point would be our profit. Okay, now what we can do is take profit. Because we are pulling money from the market, you want to be taking out your profit before it reach the full profitability, which is the first era where buyers are strong in the market. You want to take profit at that era, right? Because chances are, if the buyers gain strength again, they can potentially come back in the market. But because we have the info which shows sellers wiping them out, we use this as our TP1, right? Okay, so let me put in some text again. TP1, okay, is right here, okay, and TP2. Let me put in some more text. Okay, all right, so now we have 2 points in the market where we can look to take sell trade, because we already identified that buyers weren't able to come back, right? The chart would look something like this. Buyers weren't able to come back to this price point, right, after the sellers wipe them out. So we're looking that sellers set up their army right in this area, looking to fight back if buyers come back to this area, right? And this era right here again, because buyers were able to push the market to this price point, right, but not all the way up to this price point, chances are there are more sellers at this price point ready to push the market down again if buyers come back to this era. Okay, so we'd look to sell short again at this price point, right here, and we will put our stop loss behind the last highest price point. Okay, and we will do the same thing, 2 entries, one for TP1, right? One for TP2, right? So we have our two entries, one for TP1, one for TP2. But because we are pulling money from the market, right, we would be mainly focusing on TP1 and not so much TP2, right? And always remember to use a 1 to 2 or 1 to 3 risk to reward ratio. Okay? All right, let me put in some more text. Okay? So because the sellers were able to sell the market from this era, this would now be a lower high, right? For the sellers, this would be a lower high, right? And right here for sellers, this would be a LL, lower low. No, lower high, because it's anything above is high. My bad, lower high, right? Anything below is lower low, right? So for sellers, anything above lower high, right? And for the sellers, this would be regarded as lower low, right? 3 lower high and lower low, right? Lower than previous low, okay? Lower low, okay? All right. So when you move forward in time, as you can see, market came back up into this area, collecting orders, right here, and sell all the way down, taking out this lower low, creating a new lower low, okay? Now, as you can see, I gave you two examples, right? One from 2023, and this is a current example in 2024. So this technical analysis video and technical analysis strategy and pointers is very current. It doesn't matter which market you're trading, right, or which currency you're trading, right, still remain the same. Concepts still remain the same. Market is a movement of buyers and sellers, right? Is a reflection of buyers and sellers. Nothing more, nothing less. Okay? So we can take this a bit further, right? Market came back to this price, sell down. Okay? Okay. All right. So for the buy trade, let me just put Yes, so for the buy trade, market came back to this price point and sell up. Okay, let me change this to green. Okay, all right. So let me just show you one more thing. Now, for this trade, you would be risking 520, 332, 107, about 2,000 pip, right? To make 3,000 pip, okay? Roughly over 2,000 pip, right? To make 3,000 pip, approximately about 4,000 pip, okay? Now, because you don't want to be risking too much, right? You wanna, especially if you're trading small accounts, right? Like a big institution wouldn't mind just taking the trade as is. But for persons trading retail or small account, what you don't want to do is minimize your risk as much as possible. Okay, so what I'll normally do for this area, I'll go down to the 1 hour time frame or lower to try to find a better entry. Okay, so in this area, right, this area is showing me right here. Let me zoom it up. Right here in this area is showing me that buyers push the market from this area all the way up to this area. Sellers fight them off, and there's a indecision right here, right in this candle between sellers and buyers. Okay, right here there's an indecision between sellers and buyers. So buyers push the market up, sellers sell it down. Buyers try to push it up, and the market started moving sideways right here. So as you can see, there's a strong sell pressure right in this area, right here, which drive the market down, and then there's a continuation with this strong bear engulfing candle. Okay, so what I would do to minimize my risk, right, I would put my entry at this point or at the tip of this indecision wick right here, or some people would call it a indecision candle or a pin bar or whatever they want to call it, right? So I would put my entry right here because I know there's strong buy sell pressure at this price point, so chances are the market won't get to this price point, right? So in order to get my order fill, I would put it right at the tip of the indecision candle where buyers and sellers are fighting. So now what I've done was minimize my risk, right? So instead of risking 1,000 pip, I'm now risking 10,6106. I'm risking probably about 500 pip to make well over 7,000 pip. Okay, now let's move forward and see what happened when the price, let's leave both entry points. So this is where this right here at 106,337 is where the strong bear pressure or sell pressure took over the market, right? So you can enter here or you can enter here. So let's see where the market came and turned. Okay, voila. As you can see, right here at the area where strong bear pressure came in the market, right at this price point right here, 106,400 is where buyers came back, right, to try to fight off the sellers, right? So I would have gotten in a bit earlier, but I would have been filled, right? So you could have taken the trade here or here. So even if I place my entry at this price point, I would have placed my entry here just to be safe and get filled, right? As you can see, buyers came back a little bit above where I would have my entry. My entry would have been here at 106,094. Buyers pushed the market at 106,476, right? So I would have gotten in about 300 pip earlier, right? But I would have been filled. And then sellers sell the market down. So the proper entry point would have been here, right? And not here. But sometimes because of the strong sell pressure, you run a risk of not getting filled here. Okay? So I normally take my entry here just to be on the safe side and get filled. But the proper entry point with less risk and a cheaper price would be here. Okay? So the purple would be the earlier entry. This would be the correct entry. Okay? So in this case, we would have gotten filled on the correct entry, right? So instead of entering all the way down here on the 4-hour time frame, would have entered on the 1 hour, which is here, with less risk. Okay? And as you can see, price came back and big drop. Okay? Alrighty. Okay, so just a recap of what happened before I go. Okay? So again, buyers stepped into the market, sell the market from 99,333 all the way up to this price point, 109,425. Sellers came in the market, pushed the market down to this price, 100,062, creating a higher low, right? Then buyers pushed the market all the way to this price, failing to take out the last higher high. Okay? Failing to take out the last high which the buyer pushed the market to, where sellers came in, which is at 109,362. Okay. Now, sellers came in the market at this price again, which is 107,392, pushed the market down to this price, which is 101,186, failing to take out buyers, right, at 101,004, right? Buyers then push the market from 101, 108 all the way up to this price point again, 107,332, which is a indication that buyers are getting weak and sellers are stepping in the market, failing to create a higher high again. Now sellers push the market from 107,470 all the way down to this price point, 97,739, wiping out all the buyers at 99,374, 100,004, and 101, 127, giving us an indication that sellers are now in control of the market from 107,334 all the way down to 97,739. Now, another key factor to consider is that when sellers took out the buyers, right, there's a intersection at this price point right here, and also at the trend line. If you're trading trend, there's an intersection both at the trend line, but I'm not trading trend, so I'm not gonna use the trend line intersection for this purpose. But there's also two intersections, right? There's one at the trend line right here, and there's one at the price point where sellers take out the buyers. Okay, so this is the correct intersection and not this one. This is the correct intersection because this one is for the if you're trading trend, right? So I don't want to confuse trend trading with what I'm showing, right? So this is the intersection right here at the price point, not the trend line. So there's two intersections, one at the trend line and also one at the price point, but I'm not using the one at the trend line. So it can be used if you're trading trend, but this is not a trend trading session. So intersection would be at the price point where sellers obviously take out buyers. Okay. All right. Now, because we have all this information, which is the known, we're using the known to find the unknown. We are not guessing, we are not asking, we are not questioning. We're using mathematical principle, which is using the known to find the unknown. It is known that sellers are in control of the market from 107,372 to 97,798 because sellers take out all the buyers in this area, okay? Intersecting buyers at this price point right here, 101, 101, 088, okay? So it is clear that sellers are in the market from this price point right here, right? This price point right here, all the way down to this price point right here. So if indeed, if you wanted to take a trade at this point, you could have, because market data show that sellers intersect buyers, right? And there was a battle between sellers and buyers right here, which buyers push the market back into this area and sellers sell the market back in this area. So if you wanted for a short-term trade, you could have taken a trade right at this price point when the market was here, right? When the market was here, right, it is known that sellers intersect buyers here, taking over this area, which was a stronghold of the buyers. So chances are there's a probability that buyers are in control of this area as well. Sellers are in control of this area as well, because this was a stronghold of the buyers, now become stronghold of sellers. Now when you move the market forward, as you can see, sellers with this candle right here, buyers push the market back into this area and was rejected by sellers to this price point. Okay, so if you wanted, you could have traded this area as well. Now, it is also evident that sellers are in control of the market from here all the way up to this area. You want to backtrack and chase which was the last highest point where buyers were able to push the market and wasn't able to go back to where sellers were in control. Now at this price point right here, right, it is evident that buyers were able to push the market from here at this price point 104, 102 all the way up to 105, 441. Right now, this is where we're looking to take sell action because buyers were rejected at this price point at 105, 461, wasn't able to go back up all the way up to 105, 520, all the way up to 107, 372. Now we have our sell setup, okay? But because this area is approximately let me see the coordinates. This area is roughly 105, 520, 107, 392. It's approximately 2,000 pip or more. Okay, I'm not gonna do the, all right, let me do the calculation. All right, let me do the calculation because I want to show you how to calculate pips as well. Right, okay. So we have the coordinates, we are gonna do the calculation. Okay. Right. So the coordination where our entry is, in order to find this, the amount of stop, we're gonna minus stop from entry. Okay, so we have 105, 520.36 minus 107, 392.58, which is equal to approximately 1,872 pip. Okay, so we would have been risking for this trade 1,872 pip, right? Risk. Okay, so the risk would be, let me put it in text so that you can understand what's going on as it relates to risk to reward and risk to reward. Okay. Okay, so for this trade, the risk would be 1,722 pip. Okay, so in order to get the profit, right, you're gonna minus entry from profit. Okay, so the entry is 10, 5, 5, 20.36 minus profit, which is 10, 10, 1009.52 equal 4,510.84. Okay, so the profit is 4,510.84. Okay, that's the profit. Okay, that's the profit. Okay, so what we would want to do, even though this is more than 1 to 3 risks, right, or close to 1 to 3 risks, if you're a big institution trading with a lot of money, then you can trade as is. No, I'm a retail trader, so I can't afford to risk this much pip for one trade. So what I'll normally do, I'll go down to a lower time frame, right? So what I do, I like this area where I'm looking to enter, go down to maybe a 1 hour or lower time frame. Okay, so what I would do, I would go down to the 1 hour time frame and find the area where I'm looking to take my entry. Okay, which is right here in this square right here. Okay, this is where I'm looking to take my entry. Now, the price action is showing me, because it's all about selling and buying, using the known to find the unknown, which is a mathematical principle. Anything with numbers, mathematical principle can be applied. Don't think, don't guess. Use what is presented in the chart to find your trade, your entry, and your profit. Okay? Now, the fact that buyers were able to push the market from 104,669 all the way up to 107,184, this candle is showing me a strong buy pressure. Now, when buyers push the market to 107,201, sellers fight back, push the market to this area right here, 106,123. Buyers then stepped into the market and tried to fight back with a close right here with these two candles closing on the same level at 106,533, which giving me an indication that neither sellers or buyers are in control of the market at this price point. Now, the fact that sellers then stepped into the market again at from 106,675, pushing the market all the way down to this area right here, 105,747, then pushing the market again with a strong bear candle from 105,805 all the way down to this area with a close of a strong bear candle, 104,736. Wiping out all these buyers right here is giving me an indication that the strong sell pressure came from this area all the way down to here. Where I want to put my entry is where there is an indecision between buyers and sellers, where there is no clear winner, and then the strong sell came into the market. This information that I'm teaching you, people will charge you a lot of money to teach you this information, but I'm not here for the money. I'm here to help you, to grow with you, and help you along your journey. Now, therefore, I'll place my entry right here at the wick where buyers try to push the market up, sellers counteract, selling down the market with this strong bear engulfing candle, which engulfs this candle, and then a continuation right here. So henceforth, my entry will be right here and my stop behind the last high point where sellers were in control of the market. Okay, where buyers push the market, which is all the way up here. So when I look at the coordinates, right, as it relates to a risk to reward basis, okay, with this trade, the entry would be 106.37366. Let me put it in the calculator, right? 106.373.66 minus stop of 107.382.13 equal 1008.47 pip. Okay. So instead of risking 1072 pip, right? The lower time frame entry risk is 1007, 1008.47. Okay, so instead of risking 1722 pip, I've now lowered my risk to 1008 pip. And if I wanted to lower my risk, all I'll have to do, use the same principle and go down to a lower time frame, which is a 45-minute time frame, to see if I can find a lower entry risking lower amount of pips. Okay, so as you can see, when I go down to the 45-minute time frame, it's giving me a couple more pips to enter, right? So it's showing me that right here at this price point, buyers and sellers right here, where it closed with buy and then sellers, there's a sell candle right here greater than this candle. It is showing me that I could maybe enter here. Chances are I might not get filled, but let's see, right? Cheaper entry, but order would not have been filled. Okay, so the cheaper you try to get price, chances are you might not get any, right? Because if the price is cheap, then a lot of people are gonna want to get in before they can't get it. Okay, there's gonna be more supply than demand at a cheaper price. Okay, and if there's more supply than demand, price is gonna go down. The chances are you're not gonna get any, right? Because people are gonna buy it up before it reaches to you, right? So would have to take this trade anywhere at this price point in order to get filled. Okay, but there are other things you can do in order to try to get filled at a earlier price, but you can try to drill down as low as possible, right? See if you can find a price point where you have a more comfortable entry. You're not getting more data, so we can't go lower than 30 minutes, I think, for this example. Okay. right? So here you have it. So at this point, right, we're on the 30-minute time frame, okay? So this is what you can do, right? So right here, it shows where buyers are in control of the market right here. Sellers, there's a sell bear engulfing candle, take out the buyers right here. Buyers try to push the market up. They were rejected on this bull, this bear engulfing candle right here, where sellers are now in control of the market, right? So what you can do, you can have two entries, okay? And this is what I normally do. In order to be on the safe side, if you want to risk less, right? What you can do, you can enter here, as I show you in the buy example before. You can put your stop, your entry here, and your stop maybe 20 pip or so above entry, right? But in doing this, you risk the chance of getting stopped out of your trade, okay? So in order to avoid being stopped out, you can have two entries, okay? So you can enter here, and you can enter here. Now, so with this entry right here, you would be risking, let me put it in the calculator, you would be risking 106,693, 10, 6, 3, 5, 9.74 minus, it should have been the other way around, but I'll just do it. 106,693.53 is gonna be what? Anyway, so it's gonna be the stop minus entry, which is 106,693.53 minus 106,359.74, 333.79 pips, okay? Right? So with this entry, your risk would be battery is running low. Let me put in the connected charger. Okay, so with this entry, you would be risking, let me put it in the text. So it would be 333.79. 333.79, okay? And you would be risking 333 pips in order to profit. So this is entry minus profit 87.60, 97.599. So this would be well over 9,000 pips, okay? So you'd be risking 333 pip to make approximately well over 9,000 pip. And look, as you can see, right, this is the 30-minute entry right here. This is where the market came, so this would have been a win right here. So let me put a black line to show where the market came. Right, this is the price point where the market came, right here on this black line. And then look where our entry is, okay? So this is a black line right here. So this would be our entry. We would have a lot more pip to spare. This would be a major winning trade. So we would have gotten 9,000 pips with a 333 pip risk, okay? And we could have gotten way more than the 9,000 pip, because see, the market went all the way down to here, right? So if you got value from my video, right, all I'm gonna ask of you is to just click the like button, subscribe, help this video to rank in the YouTube algorithm, help this video to reach more people, because the professional traders, the banks, the big institution, they're not gonna show you this stuff, okay? But I'm here for you. I'm here to share with you what I've learned in my 7 years of investing, okay? So if you want me to share more content like this, leave a comment. Let me know what you think. Let me know if this video impacted you, all right? Bless up.